Why don't finance professionals make good comedians? Because they take jokes too. Literally. Hi there, today we're going to dive into the world of finance. Our focus for today, the concept of deductible. A seemingly complex term, but fear not, we're here to simplify it for you. Understanding financial terminology is like learning a new language. It might seem daunting at first, but once you get the hang of it, it can open up a world of opportunities. And it can significantly impact your financial decisions. Knowledge is power, and today, we're empowering you with the understanding of what a deductible is. When it comes to finance, every detail counts. And deductible is one such detail that often goes unnoticed but can make a massive difference in your financial journey. So, are you ready to decode the mystery of deductibles? Brace yourselves for a financial journey. First things first, what does deductible mean in the financial world? Well, imagine you're on a treasure hunt. You have a map, a compass, and a shovel. But there's a catch. Before you can start digging for the golden loot, you need to pay a fee. In the world of finance, this fee is what we call a deductible. Now let's break this down a bit further. The term deductible is essentially an amount you agree to pay out of your own pocket for a service before your financial benefits kick in. It's like the cover charge at a fancy nightclub. You pay the bouncer, and then you can dance the night away. In the context of insurance, a deductible is the amount you pay before your insurance policy begins to pay. For instance, if you have a car insurance policy with a $500 deductible, and you get into an accident that causes $1,000 worth of damage, you would pay the first $500, and your insurance company would cover the rest. When it comes to taxes, a deductible is an expense that can be subtracted from your gross income, reducing the total amount of income that's subject to tax. Think of it as a coupon that you can use to lower your tax bill. In healthcare, a deductible is the amount you pay for covered healthcare services before your insurance plan starts to pay. Let's say you have a health insurance plan with a $1,000 deductible. This means that you would need to pay $1,000 for your own healthcare services before your insurance company starts to chip in. So, to put it simply, a deductible is a set amount that you pay out of pocket for services before your financial benefits, whether they be insurance coverage or tax reductions, begin to take effect. It's the financial hurdle you must clear before you can start digging for that treasure. So, a deductible is essentially the amount you pay out of pocket before your benefits kick in. Let's delve deeper. Scene script. Let's say you have an insurance policy. How does the deductible work? Imagine you're at a restaurant with a friend. You both decide to split the bill. But before you do, you agree that your friend will cover the first $20, and anything above that you will split equally. In this scenario, that first $20 that your friend covers is similar to a deductible in an insurance policy. So, what is a deductible in insurance? It's the amount you agree to pay out of pocket before your insurance coverage kicks in. For instance, if your car insurance has a $200 deductible and you have $1,000 damage, you'll pay the first $200 and your insurance will cover the remaining $800. Now, how does the amount of your deductible affect your insurance premium? The premium is the amount you pay to the insurance company to keep your policy active. In general, the higher your deductible, the lower your premium. Why? Because you're taking on a bigger portion of the financial risk. Think of it this way. If you have a low deductible, say $50, your insurance company knows they'll likely have to pay out more often for smaller claims. So, to balance this risk, they charge you a higher premium. On the other hand, if you choose a high deductible, say $1,000, your insurance company is less likely to have to pay out for smaller claims. This means they're taking on less risk, so they charge you a lower premium. But remember, if you choose a high deductible to save on premiums, make sure you have enough saved to cover that deductible in case of a claim. It's a balancing act between what you can afford to pay now, your premium, and what you could afford to pay later, your deductible. In conclusion, the deductible is a key component of any insurance policy. It's a way for you and your insurance company to share the risk. The higher your deductible, the lower your premium, and vice versa. Remember, in insurance, the deductible is your share of the risk. Now, how about healthcare? How does the deductible come into play? In the world of healthcare, the term deductible is a regular player. But what does it really mean? Quite simply, the deductible is the amount of money that you must pay out of pocket for your healthcare before your insurance company starts to cover the costs. For instance, if your health insurance plan has a $500 deductible, you'll need to pay $500 for your care before your insurance company starts to pitch in. So, How does this affect your health insurance premium and your out-of-pocket expenses? Well, it's a delicate balance. Generally speaking, plans with higher deductibles tend to come with lower monthly premiums. This might seem like a good deal, especially if you're healthy and don't anticipate needing much medical care. But remember, if an unexpected health issue arises, you'll be responsible for a larger portion of the costs before your insurance kicks in. On the other hand, plans with lower deductibles usually have higher monthly premiums. If you have a chronic condition or anticipate needing regular medical care, this type of plan could save you money in the long run. You'll pay more each month, but your insurance will start to cover costs sooner. And here's a key thing to remember. Not all healthcare services are subject to the deductible. Preventive care, like vaccinations and screenings, are often covered by your insurance from the get-go, regardless of whether you've met your deductible. That's because the aim of these services is to keep you healthy and prevent larger, more costly health issues down the line. So, in essence, your deductible is a bit like a gatekeeper. It's the amount you have to pay before your insurance steps up to the plate. It's a crucial factor to consider when choosing a health insurance plan, as it can significantly impact your out-of-pocket costs. In healthcare, the deductible is your ticket to your insurance coverage. And of course, we can't forget about taxes. What role does the deductible play here? Well, to put it simply, in the realm of taxes, a deductible refers to certain expenses that you're allowed to subtract from your taxable income. Think of it like a discount on your tax bill. Now, how does this work? Let's say you earned $50,000 this year, but you had $10,000 in deductible expenses. You would only pay taxes on $40,000, not the full $50,000. That's the magic of tax deductions. But hold on, it's not a free-for-all. The Internal Revenue Service, or IRS, has specific rules about what can be deducted. For example, certain business expenses, interest on student loans, and even some medical expenses can be deductible. Now, there are two main types of tax deductions: standard and itemized. The standard deduction is a flat amount that the IRS allows you to deduct from your taxable income. This amount changes year by year and depends on your filing status. For instance, if you're single, your standard deduction might be different than if you're married filing jointly. On the other hand, itemized deductions are a bit more complicated. These are specific expenses that you've incurred throughout the year that the IRS allows you to deduct. This might include things like state and local taxes, mortgage interest, or charitable donations. The trick is, you can't take both a standard deduction and itemize your deductions. You have to choose one or the other. So you'll want to figure out which one will give you the bigger tax break. In the end, understanding tax deductions and how to use them can save you a significant amount of money. It's like finding hidden treasure in your tax return. So keep those receipts, track your expenses, and don't be afraid to ask a tax professional if you're unsure about something. Remember, every penny counts when it comes to your hard-earned money. In taxes, the deductible can be your saving grace. All right, so we've covered a lot today. Let's recap the key points about deductible. In insurance, a deductible is an amount you pay out of pocket before your policy kicks in. It's a way to share the risk with your insurer, and it directly impacts your premium. When it comes to healthcare, deductibles work similarly. They're the amount you pay for healthcare services before your health insurance begins to cover costs. Usually, the higher the deductible, the lower the premium. In the realm of taxes, a deductible is an expense that can be subtracted from adjusted gross income to reduce your taxable income, and therefore, your taxes. Understanding your deductible in each of these areas is crucial. It can greatly affect your financial decisions and help you plan for future expenses. And that's a wrap on deductibles. Remember, knowledge is power, especially when it comes to finance. Until next time.